Welcome back, medical billing and coding students, to part 15 of our explainer. So today we're unpacking the complex, sometimes totally confusing, but absolutely essential ecosystem of commercial insurance payers. Look, if you want to make sure your claims get paid accurately and, actually on time, you've really got to know exactly who you're dealing with on the other side.
Commercial insurance giants, managed care plan types, high deductible and discount plans, pricing networks and write-offs, and finally, third-party administrators, or TPAs. So, starting off broad with Section 1, the commercial insurance giants and the macro landscape. I just love how the text captures the reality of your day-to-day work here. It says, you need to have the coding agility of a cheetah to keep track of all of these possible payers, as well as to figure out who is supposed to pay you, how much, and when. It really is a jungle out there. You've got to be fast, you've got to be adaptable, and hyper-aware of the specific rules governing each payer if you want to survive and thrive in this profession. So who exactly are these giants? Well, commercial insurance carriers are private companies, and they pay the vast majority of healthcare claims. So unlike government payers, Medicare or Medicaid, these are entirely private entities. Think of the big names we see all the time, like United Healthcare, Aetna, Cigna, or Coventry. They manage the group health policies that most employers provide for their employees. They're basically the major cogs in the U.S. healthcare system. You're going to encounter them constantly, and honestly, knowing their individual rules is totally non-negotiable. Let's move to and see how this builds as we enter Section 2, managed care plan types at the micro level. Now, when we look closely at the plans your patients actually carry, we see a whole world of variety, but it's primarily split between PPOs and HMOs. With preferred provider organizations, or PPOs, patients enjoy a lot of flexible network choice. They can actually often see specialists directly without even needing a referral. The trade-off for the patient, though, usually higher premiums and higher out-of-pocket costs. On the flip side, we've got health maintenance organizations, or HMOs. These offer lower premiums and sometimes zero copays. But, and this is a big but, they use a strict primary care physician, or PCP gatekeeper model. Patients absolutely must see their PCP to get a referral to a specialist, and coverage is strictly limited to that HMO network. What's really fascinating here is how the industry has kind of blended these models to create hybrid plans. Point of service, or POS plans, are true hybrids. They combine PPO and HMO features together, allowing patients to literally choose their benefit level depending on where they seek care. If they stay in an HMO network, they get HMO benefits. But if they go to a PPO provider, they tap into PPO benefits, though usually at a higher out-of-pocket cost. Then we have EPOs, or exclusive provider organizations. These require a designated PCP and referrals, just like an HMO, and they strictly limit coverage to network providers. The one and only exception for an EPO is a true medical emergency where a network provider simply isn't available. Moving right along to Section 3, high deductible and discount plans, which really highlight how the financial burden is shifting these days. $5,000. This number represents a massive shift in how healthcare is paid for today. High-deductible health plans give patients lower monthly premiums, sure, but they pair them with massive out-of-pocket deductibles, very often around $5,000. Because the patient is carrying so much of the initial financial burden before the insurance even kicks in, these plans are frequently tied to pre-tax health savings accounts, or HSAs, or employer-funded health reimbursement accounts, HRAs. As a biller, you really have to realize that until that massive deductible is met by the patient, you're often collecting directly from the patient's wallet, not the commercial carrier. Now, I absolutely cannot stress this next point enough, so please pay close attention. Discount plans are not actual health insurance. Seriously, they are basically just monthly membership programs that grant reduced rates for participating doctors. The huge danger here is that patients are often totally taken aback when they try to claim their quote-unquote insurance, only to realize they still have to pay out of pocket, just at a slightly reduced rate. You must perform upfront verification on these plans to safeguard your provider's revenue and, of course, ensure patients aren't completely blindsided by unexpected costs right there at the front desk. All right, let's zoom back out for Section 4, pricing networks and write-offs. This is really the invisible back-end machinery of your job. This brings us to a highly provocative question. Who really determines the claim cost? I mean, you might assume it's simply the commercial carrier whose name is printed right there on the front of the insurance card, right? Actually, scratch that. The carrier isn't always the entity deciding the exact financial value of that claim. This is exactly where pricing networks come into play. A pricing network is essentially a middleman, acting as an agent for the commercial payer. The carrier might participate in several different networks, and the network is the actual entity that prices the claim based on pre-negotiated rates. Here is a massive pro tip for your daily workflow. Always look closely at the patient's insurance card for multiple network logos. Those little symbols tell you exactly which pricing network the payer might consult, and that is absolutely critical for you to know to ensure accurate billing.
So the crucial point here is understanding contractual write-offs. See, when your provider signs a contract with a network, they agree to a set payment allowance for each specific procedure. If your provider bills a dollar amount higher than that allowance, well, the remaining amount is the write-off. It's the non-billable portion of the claim that is canceled entirely due to those contractual limits. Neither the payer nor the patient pays it, it just disappears. If you aren't paying attention to which network is pricing the claim, you might end up facing massive, unanticipated write-offs, and that directly hurts your provider's revenue.
Finally, let's look at Section 5, Third-Party Administrators, or TPAs, and the self-insurance route. A lot of small businesses want to offer health coverage to their employees, but they really want to avoid those expensive, standard commercial premiums, which can easily be around $450 a month per employee. That adds up fast. So they bypass the traditional insurance model altogether to save money. How does it work? First, the employer chooses to self-insure. Second, they hire a TPA to manage the process. Third, that TPA accesses established network pricing to get the best negotiated rates for medical care. And fourth, instead of paying a monthly premium to a carrier, the employer just pays the exact network discounted claim cost directly from a company bank account. The TPA is acting as the administrative middleman here, keeping costs strictly controlled for the employer, while you, the biller, still process the paperwork through the usual standard channels.
Ultimately, understanding this incredibly diverse ecosystem, from the giant commercial carriers all the way down to the strict rules of an HMO, the high deductibles of an HSA, the back-end role of pricing networks, and the self-funded strategies managed by TPAs, that is exactly what transforms you from a novice into a highly effective medical biller. You really do need that cheetah-like agility to adapt to whichever payer steps up to the plate. Keep studying this material, keep practicing, and you will absolutely master this ecosystem. After all, the next time you process a confusing claim, you have to ask yourself, who is really pulling the strings behind the scenes? Please like, share, and subscribe to Decode Healthcare with Harshal.